One energy company is turning to horizontal drilling, looking to tap natural gas deposits in a way they never have been before. NBC's Janet Shamlian is live in Shreveport, Louisiana with that story. Janet?
Melissa, the convergence of technology and a new play for natural gas is making this one of the hottest areas in the country for energy right now. It's called the Haynesville Shale, and it is 3.5 million acres of some natural gas. It could prove to be the largest natural gas field in the United States. Chesapeake Energy, whose earnings are due out later today, was first in, credited with the find. They've already snapped up the mineral rights to 500,000 acres and are still buying more. And talk about timing. If you were here in January, you could buy mineral rights for about $100 or $200 an acre. Now that number is in the vicinity of $30,000, and some are predicting that it could go up to $50,000 an acre. So with that kind of money at stake, it's completely changed the dynamics of this community here in Northwest Louisiana and in East Texas. People getting million-dollar paydays. A lot of companies coming in wanting a piece of the action here. The well behind me is number 12 of some 6,800 that are predicted for this region over the next 3 decades. And here's where the technology part comes in. It's very expensive to drill here. The natural gas is 10,000 feet down in Jurassic Age shale, and so they're using a procedure called horizontal drilling where they go down those 10,000 feet and then the drill actually turns and goes horizontal another 3,000 to 4,000 feet. And I want to use this analogy or this descriptive. It's not unlike a coat hanger that actually bends. You would think that it could not bend, but they actually take it down and then go half the length to get more access to the natural gas assets that are there. So there are very high hopes for this region, Melissa, and it's just drawn a huge amount of speculators here, a lot of people who want to get in on the action. Again, Chesapeake, we're going to hear from them on their earnings later today and see what impact the Haynesville Shale has had on what they're doing.
All right, Janet, thanks so much. Really interesting story. More on energy now. Crude prices have pulled back after reaching an all-time high earlier this month. So has the excitement over peak oil peaked? Let's ask Matt Simmons, chairman of Simmons Co. He is also the man behind the peak oil theory. And we have David Kirsch with PFC Energy also with us today, is our contributor, Paul Kedrosky. Matt, you know, I want to say in the interest of full disclosure, you and I go way back. You know, you said that crude oil was going to $30. I remember it was around $19 or $20 at the time. A lot of people thought you were crazy. You were obviously right about that. I was in Saudi Arabia recently, and they were outlining for everyone where they were able to bring more oil online. We have a graphic right here of some of their fields that they're bringing online to increase production. They were flying reporters to Horace, one of their big fields that's coming on. Do you still think that production, especially in Saudi Arabia, has peaked?
I suspect it has, but I think it'll take probably about 3 more years. Correas, for instance, is one of the most technically challenging projects that any company in the world has ever done. They have a 56-inch pipeline bringing 4.5 million barrels a day of Arabian seawater to create an artificial aquifer to try to push the oil out of the ground. It'll probably work, but it is totally unproven how much oil can come out. They're really betting the ranch on technology that's really almost over the top.
David, what do you think about that argument? I mean, they are not ones to overpromise in the past.
No, certainly, and they've taken their time in even promising to get to the 12.5 million barrel per day capacity until they were sure that they could do it. This is one of the reasons why they're reluctant to talk about 15 million barrels per day. But I think the constraint is more capacity in terms of capital, what the service sector can provide in project management, not geology. If I look at the performance of Saudi Arabia's output over even just the last 18 months, it doesn't suggest to me that the oil sector is in decline. They went from about 9.2 million barrels per day in mid-06 down to 8.5 in July of last year. Now they're producing at 9.7 million barrels per day. You can't swing at that level of magnitude if your oil sector is about ready to go into decline, or if it indeed is already into decline. This has the hallmarks of a very healthy oil sector for me.
Yeah, so David, you're saying Matt's wrong, basically.
On Saudi Arabia, I mean, I think longer term, we do have some convergence of views. I think we're going to start seeing the new oil sources more difficult to reach, increasingly expensive. I think longer term we're looking at an end of oil as a cheap fuel. But I think where we get from here to there is where we differ a little bit. We see over the next couple of years actually probably a pretty sloppy oil market with increased surplus capacity coming both from higher capacity in OPEC and non-OPEC, and very slow growth in demand.
Now, what do you think about that? Because, I mean, when I go to OPEC and go to various summits, they're saying that there is oil on the market that nobody wants to buy, sitting in tankers offshore. I mean, you hear that from people like John Kilduff, all kinds of people that are watching the market. It doesn't seem like production has peaked.
Well, you know, one of the oddities is that we're basically taking at face value a bunch of claims with absolutely no verification at all. It would be, you know, I could tell you basically by 2012 I'm going to be worth $2 or $3 billion, but there's no way that's going to happen.
But what do you mean? The oil's sitting in tankers offshore, ready to come to market. I mean, the oil is out of the ground.
If that was the case, oil prices wouldn't be $140 a barrel. Well, I think we have to be very realistic that we have a bunch of boasts right now about how much oil capacity there is. There is no proof whatsoever that Saudi Arabia is even producing 9.5 million barrels a day, let alone 9.7. It doesn't show up in any of the export statistics of the IEA. So I think it's time to send in auditors and actually get real production data and stop just taking people's confidence that we can get there, because we have a very tight market today.
David, what do you think about that?
Look, I think what we're seeing in the market right now is if we take a look at Mars production in the Gulf of Mexico, where we have full accounting, they're seeing, too, an increased difficulty to place those barrels into the market. The rally up to $147 was not led by any sense of crude oil tightness, but by extreme tightness in distillate markets, particularly in Asia. And even there, we're now seeing an easing of those balances, not only as the U.S. is increasing its distillate output, as Europe and Asia come out of refinery turnarounds, but as India and China are adding 1.3 million barrels per day of new refining capacity by the end of the year. I mean, we've got plenty of crude oil in the market. If you want it, you can go out and buy it.
Right.
We've got plenty of refining capacity over the short term. We need to continue to build some more. And over the next 5 to 7 years, we're going to have plenty of oil capacity, too.
Okay.
I think the problem is, does demand continue on a very rapid pace, or do we start making some of those policy moves now that will pay off in 5 or 10 years?
I want to hear what Paul thinks of this argument.
Yeah, I mean,
Who's persuading you?
No, you know, I lean more towards where David stands here, and I think the more interesting question for me right now is at what price, at what point do lower prices actually become more problematic than higher prices, strangely enough? Because, you know, the problem we all have is trying to make investments going forward in alternative fuel sources. You look at oil prices and you say, wait a minute, if these are coming back to $80 or, you know, $90, what does that mean for investments in geothermal? What does it mean for investments in other sort of base energy?
That's a great question, and before we run out of time, Matt, let me ask you, where do you think the price of crude oil is headed? We've seen a big pullback, you know, on a relative basis from that high on July 11th. Do you think that we've seen a near-term high?
I would doubt it, because I think the market's too tight. I think it's interesting, the concept we have so much crude on the market. If you look at the EIA's data that came out 2 days ago, we're still basically at about an all-time low in days supply. Our finished product inventories are extremely low.
Price headed?
And so I think the prices are headed way up. I think oil's still very inexpensive, and the faster we get our head around that, the better off we're all going to be.
Are we going to visit that high that we saw on July 11th before the end of the year, do you think? Are we going to see it before the fall?
I suspect so.
Where's the price going to be Labor Day, Matt?
No, I don't know, but I think that we should prepare ourselves to not be shocked when we cross $200 a barrel.
Okay.
The market's tight.
Yep. Thanks to all of you for joining us. Matt, you have a beautiful setting there. I know you're in Maine. Thank you for taking time out of your vacation to be with us today.